Good evening, everyone. Welcome to the channel. Today I am going to talk about BIDE interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. BYD Company Limited offers a diverse range of businesses and services, including mobile handset components, housings and electronic components, assembly services, automobile manufacturing and sales, auto-related molds and components, rail transport and related business, automobile leasing and after-sales services, power batteries for automobiles, lithium-ion batteries, photovoltaic products, iron battery products. The significant increase in BYD's stock price over the past year can be attributed to several key news events and developments. The unveiling of its ultra-fast charging technology and new EV models in March 2025 was a major catalyst, with shares surging to a record high after the announcement. This innovation positioned BYD ahead of competitors like Tesla and led to a remarkable 161% increase in February 2025 sales. The rollout of AI-powered driver-assist technology in February 2025 also contributed to the stock price growth, as analysts saw it as significantly expanding BYD's technological lead over other OEMs. Additionally, strong performance in European markets and revenue growth in the first half of 2025 further boosted investor confidence. However, a more recent decline in September 2025 was attributed to an aggressive price war in China, decreased profit margins, and increased competition. Despite this setback, BYD's stock price remains up 35.84% over the past year, indicating sustained growth and resilience in the face of industry challenges. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On one hand, revenue growth is driven by new energy vehicle sales, overseas market expansion, increased production capacity, and breakthroughs in premium brand strategy. The company's continuous innovation in mass markets, iteration of advanced driving algorithms, and economies of scale have also contributed to its revenue growth. Furthermore, the launch of new models, accelerated pace of overseas expansion, and enhanced competitiveness of products through technological investments have all played a significant role in driving revenue growth. On the other hand, revenue decline is driven by intensified competition due to market evolution, increased price competition, and excessive marketing. Challenges in the new energy vehicle market also pose a threat to revenue growth. Overall, the company's ability to adapt to changing market conditions, innovate, and expand its presence globally will be crucial in driving sustained revenue growth. Net income for the company increased by 13.79% to RMB 15,511 million, a significant year-on-year rise of 1.3 times. This growth can be attributed to various factors, including the stabilization of end product prices and increased profitability in the photovoltaic industry. Additionally, premium pricing in overseas markets contributed to higher profitability. However, profit margins decreased by 18.24% to RMB 66,866 million, despite improvements due to the aforementioned factors. This decrease can be attributed to a drop in profit margin percentage from 18.78% to 18.01%. The main driver of growth was the expansion of new energy vehicle business, which overshadowed the decline in profit margins. The company's net income and profit margins have undergone significant changes due to various market factors, including global digital transformation, artificial intelligence explosion, and China's state subsidy policy stimulating the end consumer market. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash inflow of RMB 31,833 million as of June 30, 2025, the company is clearly producing positive operating cash flow. This suggests that the business is financially stable and capable of meeting its obligations, positioning it for continued growth and success. The company's debt level has undergone significant changes in recent years. Total borrowings have increased from RMB 28,584 million to RMB 39,076 million, a notable rise. However, this increase is not uniform across all types of borrowing. Short-term borrowings have surged by 33%, while long-term borrowings have decreased by 34%. Despite the overall increase in debt, interest expenses have actually decreased by 13% from RMB 116,060 to RMB 972,045. This suggests that the company may be benefiting from lower interest rates or more favorable loan terms. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, as indicated on pages 14 and 52 of the report. Secondly, the company has also implemented a share buyback program, as mentioned on page 68. This demonstrates the company's commitment to returning value to its investors through both dividend payments and strategic share repurchases. That concludes the financial summary for BIDE. Feel free to comment below, and I will be happy to answer them when possible.